here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Black Bull Market, saving you up to $600 a year. Get either the Essential Plus or Premium plans absolutely free. All you need to do is trade from one lot a month at Black Bull Markets, and you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below. Our sponsor Blue Guardian's the only prop firm that gives their traders a tool to protect them from hitting their max daily loss and overtrading. It's super simple to use. Just set the Guardian Protector each day from your dashboard. Did you also know that they've just released an unlimited time evaluation with a 0 trading days requirement, giving you plenty of time to hit their low 8 and 4% targets, making it super fast to get funded. Plus, it's cheaper than the 40-day time limit evaluation. Check out the link and coupon in the description to get 10% off your next Blue Guardian evaluation. Hey folks, what a view behind me. I'm at Black Bull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Black Bull Markets, saving you up to $600 a year. Get either the Essential Plus or Premium plans absolutely free. All you need to do is trade from one lot a month at Black Bull Markets, and you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below. Our sponsor Blue Guardian's the only prop firm that gives their traders a tool to protect them from hitting their max daily loss and overtrading. It's super simple to use. Just set the Guardian Protector each day from your dashboard. Did you also know that they've just released an unlimited time evaluation with a 0 trading days requirement, giving you plenty of time to hit their low 8 and 4% targets, making it super fast to get funded. Plus, it's cheaper than the 40-day time limit evaluation. Check out the link and coupon in the description to get 10% off your next Blue Guardian evaluation.
There we go. Hello. Testing. How's everyone doing? Diego here from Bank Level Trading. I'll be covering some setups. If anyone's interested in, a forecast, let me know in the comment box. And also let me know what strategy do you trade. Come and say hi, everyone. Come on. Just making sure it's all working. Let's go. It should work. Come on. I just need a confirmation. Come on, you know me. Just give me a thumbs up if you can hear me. Quabi Bolt. SMC, lovely. What specifically in SMC do you trade, Quabi? And good morning, Michael. Where are you from? Now you can hear it. Fantastic. Okay, cool. Amazing. Let's get the ball rolling. What's everyone's bias, by the way, on the dollar? Is everyone bullish or bearish? Alabama, nice. Okie dokie. I'm good, Trevor. Thank you very much for asking, brother. Okay, let's get straight into it. Not going to be too long, but just by looking at the dollar, firstly, this move was anticipated. We did call it last week. We were anticipating this lot to get taken out and potentially these structures, but specifically this imbalance in price, right? This gap, and it was literally a magnet. So everything has now been liquidated, meaning we're actually bullish for now, unless it changes, right? So that's actually quite cool to see that this gap has been filled. Liquidation as well has been hit. Equal lows has been filled as well. And this little imbalance in price as well has been filled. Crazy how liquidity just works from one end to the bottom. So it's now grabbed liquidity, as you can see, to the downside. So obviously we're expecting price to now rally to the upside. But before we do that, I'm pretty sure we may get a little stop hump below this little structure here before going long. So I'll be expecting some form of a stop hunt and then aim for that liquidity. right? It's keeping it really simple, as you can see. Now, in terms of Elliott waves and patterns and how you can avoid certain trades, then obviously that's where the Elliott waves come in handy. So from this particular setup, we can see there's a larger descending pattern. Can't really see the structure unless you go on the lower time frame. You can see you can't see any wicks here, right? Can't see anything. It's just a big body. It just means that you need to go to the lower time frame. And on the lower time frame, there we go. So this is our little structure here. This is the pattern. And if we pressed the replay just before that, you can see that it was going to be a magnet to that area anyway. Hence why when I did do the last stream, I was expecting price to go down. And it did go down, right? And it's because we're trading Elliott waves and patterns. All the SMC levels, we do that at the very end, right? Because it's quite hard to predict which one, at what time, when, what day, blah, blah, blah. But if you have a pattern, just to give you an overall structure, it's going to help you eliminate all of this noise. And you're going to be targeting the third tap of the trend line, but most importantly, a boomerang outside of it, right? This is the pattern that we had last time. And as you can see, it just eventually just carried on dropping to the downside. Imagine how many traders would have got taken out at this order block or banker block or some equal lows, an imbalance here on the lower time frame, even this gap over here. All of that is what we avoid when you're utilizing smart Elliott wave patterns, right? But now that there's been a boomerang, literally just expecting price to come back in, now reverse to the upside, right? That's my current game plan. But again, a lot can change. So fantastic little boomerang. Again, textbook. Watch the replay if you haven't seen it already. This was already called. And now we're basically bullish, right? Now we can zoom into the lower time frame. And we can investigate, okay, where could price go to next? I mean, the fact that it's taken out 2 recent significant highs is actually another good little sign. All right, it's taken out these highs caused by what point of interest? You can see there's this little order block. So that's a good area for an interest. But obviously, we do have, some equal lows. It's going to reduce the probability of this area. We may even have some more price action on the lower time frames. Look, there's a little bank level here. Nice little bank level. And you can investigate on the lower time frames, and you can just set a limit order. If you want to be a swing trader, you can just set it here. Really large stops, or even at the bank level with large stops. You can do that. It's completely fine. Or you can be a little bit more aggressive and just wait for confirmation, right? Because this is plan A, this is plan B, multiple plan C's, D's, and F's and whatever. But if price were to come here, just simply wait for a break of structure and catch the recent retest, right? So I'm still expecting price to go long. For now, I'm just trying to see what else could potentially happen. It's just a textbook boomerang trade, to be fair. Very, very textbook. 1, 2, 3, 4, and 5. Boomerang. Always a little fake out. Always happens. I mean, I can show you some examples for anyone who's new, but as always, I don't have to prove the point. Unless you guys would like to show, if you want me to show you some examples of the boomerang, let me know. But I'm pretty sure some of you guys, or most of you guys, are very, you're fully aware and you're experienced with the way that we trade. This is what pair is this? This is the DXY. Right? I always look at the DXY before I look at anything else, because it kind of gives you the bias of the whole market, right? It gives you the bias for the euro, even if you're looking at cable or dollar yen, even CAD yen, because obviously if dollar yen rallies, it's going to push CAD yen down. So the dollar is, if you know what the dollar's doing, you more or less know what the market's going to do next. It's not always going to correlate perfectly, but the majority of the time it will. So this is the DXY, by the way. It's the dollar. So now I'm expecting dollar strength. We may get a little pullback on Tuesday, potentially Wednesday, maybe even further. It might even take it this low. I don't know. But this is why we need to wait for confirmation. But my bias is actually long. And this is a good little point of interest, this little bank block. This is the sweet spot right here. Okay, I'm waiting CPI release. When is this? When is CPI, by the way? Is CPI this week, everyone? Damn, already. How does DXY affect NAS? It just more or less goes on the opposite direction, right? You don't have to look too deep into it, but you know, this drop to the downside. If you look at NASDAQ in terms of correlation, what day was it on now? Hold on. Oh, CPI is tomorrow. Lovely. Okay, this has technically been dropping since the 1st of March, and it bottomed out basically on the 8th of March. We look at NASDAQ, 1st of March. Where's the 1st of March? It's right, so it's a little bit choppy. Yeah, it doesn't really correlate too well. Like I said before, sometimes it does correlate really good, sometimes it doesn't, sometimes it lags. But I don't really trade indices. I kind of look at indices to give me a clear. This is actually choppy, right? You know, exceptions doesn't really disprove the rule, but most of the time, if obviously NASDAQ's climbing, you can see it's been climbing for time. Then you look at DXY, it's been dropping for a while. So I use it for correlation, right? There's no magic source or fundamentals techniques that I use now. It's just simple correlation, like I said. Sometimes it correlates, sometimes it doesn't. But most of the time, if the dollar is rallying, indices should be dropping. I like to keep it simple. I don't like looking too deep into stuff. Otherwise, I'll start looking at the correlation between futures and oil and all that stuff, and it's just not good for my brain. I like to keep things simple. CPI tomorrow. Okay, so CPI tomorrow. Damn, CPI tomorrow. All right, so dollar strength. That's it. I'm telling you what's happening, and I'm pretty sure next week I'm going to revisit this, and this is probably going to be on the moon. Who knows? Who cares? Okay, interesting. Euro's obviously topped up by the looks of it. Let me see if there's anything else on the DXY. Anything else? H4 daily. Now it does get a little bit interesting. We do have this pattern here. And you can see there's a bit of a larger pattern in play. So it's always good to form a bias if you're wrong. So at the moment, I'm expecting the dollar to obviously climb. But if it doesn't climb, if there's no confirmation, there's simply no trade. So you preserve the capital, but at least you're prepared. You know, where is it going to go to next? Well, there's structure here, most likely a stopping of that area and potentially a third tap of this area, right? You always have to map out all the scenarios. So be expecting potentially something like this and then a rally or a reversal from the green point of interest. Now let's see if there's anything else going on. So there's a larger potential pattern in play. See that? Massive, massive channel. There we go. So now we're kind of stuck in this range, right? This massive sort of range. Wait, wrong thing. Overall, from a higher time frame perspective, the dollar is going to drop. We know that, right? But the current price action, if it's a bullish price action on, you know, the H4 or the daily, etc., it doesn't mean that the trend is reversing, it's never going to come down. It just means that, okay, maybe it's slowing down in terms of there's no fuel, there's no petrol, so it probably needs to rally first, grab some liquidity let's say, I don't know, what's this momentum here, right? A banker block, order block, get that point of interest, grab the liquidity from there, and then it's going to have the momentum to come all the way down here. But that, for me, is thinking too many steps ahead. And it's also a higher time frame perspective, right? I like focusing on the current, recent, relevant price action. I'm aware that the higher time frame is obviously bearish towards this trend line, but there's enough opportunity for price to just come up here, and that's it. That is my personal sweet spot, right? Along here. After that, I literally would not trade for a whole week. And then next week, I might just look for a short. The following week, there might be a big long. The week after, there'll be a short. And just keep on trading whatever direction that is. And you can see we'll start forming a bit of a pattern. 1, 2, 3, 4, 5, banker block, etc. And then a big drop to the downside. So there's multiple moves every single week. I personally just like taking one sort of trade at a time, knowing that the high time frame is obviously bearish. By the looks of it on the weekly time frame, you can kind of see there's a larger pattern sort of, you know, formulating. And if it does go towards the point of interest, we can see 1, 2, 3, potential 4, 5. That 5 is already in confluence with whatever price action we have over here, right? You can already see there's an imbalance, really tight imbalance there. You can see the imbalance between the structure. There's these massive order blocks over here, multiple points of interest, even a gigantic gap. There's lots of points of interest here, but this is obviously because in these points of interest, look what happened away from it. Massive momentum, massive liquidity, right? That's where I'm expecting price to eventually go to. Doesn't mean it's going to go to there now and next week. No, right? It's the same thing here. There's liquidity here. It's made some gaps. There's liquidity here. Eventually, it retested it, right? You can see from down here, smashed through it. Lots of liquidity here. Smashed through it. Probably lots of liquidity here and over here. Can easily smash through it, but I'm using it for targets unless there's a pattern to tell me I'm going to be selling it. So a lot is going on, right? I'm just kind of trying to keep it really simple at the moment and just focusing on just the current pattern, to be fair. Just like this current pattern, current price action. Keep it really simple. Go to the lower time frames. And at the moment, there's nothing here. Lots of momentum. Just need to wait for some price action. So somewhere around here, I would like to see, you know, some bigger structure and then catch a 1, 2, 3, 4, 5. This will be one schematic at plan A. Then obviously below these equal lows and around here will be plan B and plan C. But we need to see a descending pattern to authorize plan A, B, or C. All right, so that's a game plan. That's why I'm bullish on the dollar. Bullish on the dollar. And then obviously, you know, this could be Thursday and I'll be bearish on the dollar. I'll change my mind, right? I'm very quickly to change my bias. Okay, has anyone got any questions or a market you'd like me to cover real quick? $103. What's 103? 103 from Tob. 103. Yeah, no, lovely. Look at that. Nice little, perfect. 103. Nice little point of interest there. It's exactly what that is. Who knows? Overall, this area is a good point of interest. That's definitely a target. But if I'm longing the dollar, this will be the target. And most likely, even just to be a little bit more conservative, this sort of bank level. But as a very conservative target, just target the massive order block, right? Obviously, when it comes to the entry, it's a different story. You know, if you're buying the market, you want to just come out here knowing it's probably going to come here anyway, but you want to exit here. In terms of entering the trade, you do not want to enter here, do you? When there's some points of interest above here, even above here. That's where you wait for confirmation, wherever it is, and then you sell it. But as when you're targeting your point of interest, always come out before it, if that makes sense. To be conservative. Okay, is anyone still there? Okay, let me actually where is this now? I'm going to be doing a free webinar this Wednesday covering some of the basics of the strategy, the BOT Foundation, mainly to focus more on liquidity hunts, how to generate high risk reward trades, and also how to effectively use trade management at the beginning of your trade to help with your psychology and also mitigate risk. So if anyone's interested in joining that webinar, it will be held within the Discord of CTI. I'm going to post it here on the group if anyone's interested. Feel free to join the community. It'll be a nice, fun little webinar where I'm going to go into more details of the strategy. This is just basic analysis and overview of what I'm thinking. But this Wednesday, I'll be going a little bit more technical. Which pair? This is DXY. It's not a pair. It's just a dollar. Dollar yen. Let me look at dollar yen. What's happening here? Okay, it's in a very interesting point of interest. Massive sort of banker block there. You can see it's broken structure. It's done a stop run of this area, and it's a lovely little QM. I think dollar yen looks decent for a long. Decent for a long. We would like to see price action break the structure and then get involved on a pattern somewhere around there. And we're going to look at gold. No, I mean, the fact that you posted, I look at gold now. But yeah, just, you know, I'm not going to be analyzing 30 pairs for you guys. I mean, if you just post your idea or a currency, I'll happily break it down. So yeah, let me look at gold. Where's gold now? Gold. Gold is, where's gold? There we go. This is where gold is going. I wonder where this is. Yeah, 2,280 approximately. I don't trade it now. I use it for a market bias. So if we zoom out on gold, you can see it's on its way up. You can see there's all these sort of patterns here. Larger time frame, you can see the equal highs have been taken out. This trend has been taken out, so we can now separate it. In fact, we can most likely delete it now. That's done. And now this is very, very simple. I bet you guys were like, I wonder where gold is going. It's really simple. Look, 1, 2, 3, 4, 5. This is where gold is very likely going to go to next. And then a massive drop. Just heads up for that one. In fact, I even called. I've been doing these live streams for a while. And I do recall from here somewhere saying approximately around here, there's going to be a big long to take at these equal highs. Is exactly what's happened. Now, I'm telling you right now, it's coming here. Really basic stuff. It's not even me. It's the patterns and the Elliott waves and the trend lines that's telling me where it's going to go to next. So, but yeah, that's where I'm expecting gold to go. So this is going to be roughly, yeah, approximately down here, around 2270 conservatively. But as you know, with the strategy 1, 2, 3, 4, 5, it tends to do a boomerang and it goes outside of the pattern and then a drop, right? So really gold 2,300 is very, 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 very likely programmed. right? Obviously, if there's lots of gold strength, what does that mean for the dollar? It means dollar weakness. Again, I'm looking for dollar strength, but I'm aware of the higher time frame. Doesn't mean gold is just going to go vertical. It could easily just, do a little correction and then continue up. It's perfectly fine. But I like using gold as well for correlation. I look at indices for correlation. I look at gold for correlation. I don't really trade gold. It's not my cup of tea, but it's amazing for correlation. So this is basically telling me that CPI is going to push gold up, meaning CPI is probably going to drop. So, that's more or less what it's telling me. Okay, has anyone got any more questions for now? Got a very silent audience today. Come on. No? Okay, should we wrap things up? Okay, look, we've got somebody here. Rochelle Mary, yes. Euro Aussie, fantastic. Cool, let's look at Euro Aussie. Let me just tidy this up. So far, Euro Aussie looks quite bearish by the looks of it. Interesting, yeah. Just check everything. 1, 2, 3, 4. Potential 5. Obviously, this 5 once and if it does go there, you can kind of see it's going to take out that liquidity, right? So that's a good little target. That's most likely where price is going to head to next. So massive drop to the downside and then a nice big slingshot boomerang style trade. So long term, to be fair, this is actually long term. So I'm actually bearish at the moment by the looks of it. Approximately from around here. But this pattern can easily start updating, as you can see. Okay, equal highs. Nice little equal highs, as you can see. Right there. 1, 2, 3, 4, 5. See, there's a little bit of a liquidity pool. And there's an imbalance, so there's lots of points of interest here. So if I was trading Euro Aussie, I would be essentially waiting for price to come up here, to be fair, and then look for shorts towards this area. H4, again, we kind of still don't know. It's just broken some structure from around here. Got some equal lows, some structure there. But then we don't really have a pattern here unless it's currently forming right now. You can see it's potentially going to be a pattern. And if that is the case, might take out this liquidity over here. So yeah, Euro Aussie, Rochelle, is kind of in an area where it's best to wait. I would personally be looking for longs around here or shorts around here, or if there's some strong bullish momentum here, a long here on a pullback, if that makes sense. It's best to sort of just wait because there's a few patterns forming at the same time. There's a smaller pattern, there's larger pattern. There was a larger weekly pattern I had that I took it off. There's no need to look at that for now. That's what I'll be looking at, Euro Aussie. If anything, I'll be probably favoriting, if you're a day trader, yeah, I'll be favoriting shorts, to be fair. Most likely approximately from this imbalance. But again, you know, wait for confirmation, break a structure, catch the retest, and just aim for like this low or this low. That's it. That's what you need to do. Does that make sense? You know, you don't want to go for the Hollywood trade, because there's a few scenarios. This can literally go all the way down, take it to equal lows, or it could easily, you know, eliminate everything, climb up, come here. And then after, and if it does go there, what can happen next? Well, two things. It could either do a liquidity hunt of this area and then drop, or, got a bit messy there, hold on. A liquidity hunt for a drop, or it could break structure, continue going up. So all these scenarios are basically future probabilities that we don't really know what's going to happen yet until price is there, until liquidity can react of it. But what we do know is that if you do wait for a little break of structure, you can just sell it towards this area. And just that enough as a trade, right? Catch it right. Nice little, well, I'm pretty sure you'll probably catch more than that. 3 to 6 are more or less down here. And that's it. That's the sweet spot. That's the edge that I personally trade. Because when you do catch a trade here, yes, sometimes it does go here and you missed out on 20R. But a lot of the time it does actually tend to, you know, do this and then just go long. You know, and it takes you out break even. So you have to be banking profit at TP1. You need to know where your TP1 is. So just trade these little moves with confirmation based on your strategy and just come out. If there's a short here, sell it, you know, take profit, come out there. If there's a buy, fine, you buy it, you know, just come out here somewhere. Because sometimes it'll come here and then it'll completely reverse. And you're thinking, why did it reverse from there? I was expecting it to come here. And yeah, I'm also being conservative to here. Well, again, it depends on the pattern. Maybe there's a new larger pattern that has to be updated, as you can see. See that? New pattern. 1, 2, 3, 4, 5. And you are aiming for the stars. So word of advice, be conservative with your TPs. So yeah, let me just tidy this up for now. Take this off, take this off, take this off. So right now with Euro, which looks interesting, it's kind of in two patterns. It's in a bounce here, but it's also in the middle of this pattern. It's not really confirmed yet, right? You want to wait for this buy here, for this pattern to confirm, or again, if this is the bounce, at least wait for some bullish momentum, not this liquidity grab, nice bullish momentum, and then you catch a wedge pattern for the long, right? Right now is a little bit risky, but the aim of the game is to try and get in before CPI, right? Just make sure you see if there's a setup, get in before CPI. Even if you get in a trade here, and depending on all the confluences and all the rules, you can literally just sell it towards where you're expecting price to reverse from, right? Why not? 1, 2, 3, 4, 5. And then you sell it, right? Again, confirmation, confluences, and the checklist is obviously going to play a part in that. Hi, Freddie. Glad you can make it. Magic at Trader, lovely. Dana Pops, Danon Pops. I'm into gold. It's killed my account. What? I'm so baffled why so many traders love gold. It's the highest, literally the highest asset class that a lot of traders trade. Yet it's the one where a lot of traders, and I'm talking numbers as well. These are the stats that some of the prop firms have released, and gold is the one that burns most accounts, and it also, it not just blows your accounts, but you just slowly die and you slowly lose your equity curve because of gold. It's funny that it's not the first time I've heard it. To be fair, that it's not just you, Danon Pops. Let me just read it. It's killed my heart. Hoping for it to drop off, but now I know it's not going to happen. I feel sick. No. I get it. You must be feeling like shit. I understand. You know, two things. Maybe backtest the strategy more, or maybe stop trading gold. right? I came into the realization that I wasn't a good trader in gold, right? I missed a lot of trades. Then some of them were break even, a lot of them were losses. I looked at my numbers, I looked at my journal, and I'm like, what am I doing? Why am I trading gold? Let me stick to the basics. Let me look at Aussie. I've got an 82% win rate in Aussie. Forget gold, right? Euro, I've got a 48% win rate. Forget gold. Then I looked at gold, it's like 27% or 37%, but I rarely take trades, wasting my time. But it's very good for correlation. It gives me a direction. So you need to know your numbers as well, and you need to know when not to trade a certain asset class, or you need to know something's up. You need to fix up the strategy, right? But don't feel so hard on yourself. It's just part of the learning growth, I guess. Trevor, the less demand of oil affects the price of most commodities. Yeah, China's demand for oil has dropped. We need to consider that. Fair enough. Fair enough. Sorry, Trevor, but if you know me, I completely zone out when I hear what's happening in the real world and the fundamentals behind it, because it doesn't. If you know me, you know that technicals always tells you where price is going to go to next, and you just enter based off technicals if you've got the liquidity right. Fundamentals give you the push, right? You need they work hand in hand together. But the last thing I want to do, which I used to do 10 years ago, is have an analysis saying I'm bullish, and then the fundamentals and gold and the presidents will say that my setup is wrong and I'm bearish. Then psychology kicks in. I either miss a trade or I could have been right. So I kind of just stopped that. And then, when I just listen to technicals, it's literally all you need, to be fair. But this is my personal experience, my personal opinion. There's obviously traders that use fundamentals and the real world events, and it helps them and they smash it. Cool. But for me, I like to really simplify everything as much as possible. It's just too much time consuming researching the fundamentals. But I'm just old school like that when it comes to technicals. I'm a proper 99.9% technical guy, but that's just me. Rochelle, Mary, yes, thank you very much. You're welcome. You're welcome. Had a similar analysis. Great to know I was on the right track. Nice. I love it. I love it when you guys, ladies and gents, you have the same analysis or at least the same bias. That's fantastic. Freddie, do you ever take profit target for upcoming gold? Yeah, the trend line. That's a very easy target. I just covered that. Can you look at pound yen? Sure. And 100% going to forget gold. Thank you. Yeah. Whoa, hold on. Don't just forget it. You need a reason to forget it, right? You need to look at your numbers. If your numbers if your numbers are poor, right? And if the data suggests that your particular strategy should not trade gold, don't trade it, right? And then you also need to really dig deep in your journal, Mr. Dane and Pops, that if your analysis is correct on gold, but you still took a loss, well, that's down to your psychology, right? So you need to find something in your trading management or something to work on your psychology, right? Because if you're getting the forecast wrong and your trading's wrong, then yeah, get the hell out of gold. But if your analysis is correct and your bias is correct, don't trade it. Personally, with me, my analysis on gold is always correct, but I never trade it because it just doesn't respect my full checklist, right? I'm showing you guys like 1 point of my checklist. I've got 5 very specific ones. Gold doesn't really respect it all the time. Normally what gold does is good for ICT traders, to be fair. I mean, if you're just trading, equal lows after a break of structure and an order block, it works wonders. But look, there's no pattern here. It's just bullet bearish momentum. So I don't really trade it. You need to trade what works for you. I'm a pattern guy. I need a pattern, and it forms higher time frame patterns, yeah, but for the entries, it can be a bit messy. I just don't like it. Me and gold don't get along, to be fair, but me and Aussie, whew, she is so easy to handle. It's crazy. You're welcome, Freddie. Trader 97, honey. Do I use the ICT strategy? I use some aspects of it, but I think 80% of the strategy is just patterns and Elliott waves, to be fair. So I'll use if I'm looking for a buy, ICT will call these equal lows. So I use that to kind of tell me to get in a trade, but there's no patterns here, right? I'm a pattern Elliott wave trader. I call myself the smart Elliott wave trader, right? Because I'm trading smart money concepts in a way, but the majority of my setups and analysis and strategy is Elliott waves and patterns refinement. If that makes sense. I don't want to sort of blow your mind with info that you won't get. Like here, for example, is a nice little Elliott wave example. One, two, three, four, five. It's a smart Elliott wave entry, isn't it? It's an Elliott wave entry at 5, and you're trading, you know, SMC or ICT or whatever you want to call it. We never had a name when I learned these concepts. It was literally just liquidity. But look, this is an example there. Nice little trade. See that? The imbalance right here, bang level. Imbalance. You put your trade a couple pips below. Trading at Elliott wave 5 pips above, you know, stop loss above there. But this is again why you need to take profit. Imagine if my take profit is here because I want to be a hero, then either this takes me out my stop loss if my stop loss was a certain level, or it takes me out a break even. But then I missed out on 6 or 4R or whatever. Always take profit, guys. You need to find the edge. And the best advice I can give you guys, ladies and gents, is look at your data and find out in terms of percentage how often it goes to your Hollywood target, how often it goes to your main TP, how often it goes to your TP1, as in, you know, what's the win rate of that? You know, if my TP on, let's say, gold, or sorry, Euro Aussie, is after doing my full top-down analysis, blah, 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 and I came to this conclusion, how often does it go there, right? If the data suggests it goes there 10% of the time before it takes you out and does some nonsense and then it goes there, it means I shouldn't really be banking here, right? Then make your way backwards and be like, okay, what about TP2? How often does it go there before it does something stupid and it takes you out? Okay, maybe 20% of the time, right? Or how often does it go to the very, very first significant, obvious little structure here on the left? And then you realize, oh shit, it goes there 80% of the time. Why is your take profit all the way down here when you can have a 80% win rate? You see, you need to study your data. You need to backtest everything. And this is just referring to just exits. You know, you need to also implement that for targets. You need to implement it with whatever your strategy is, a wedge, a particular Elliott wave, or equal highs. Like, you need to really study your data, right? That's where a lot of traders are either lazy or they struggle. The ones who know the data are the ones who are intact with their psychology, right? Because if something happens, then you're like what's the word I'm looking for? You're a step ahead of the game if you know what's going to happen next based on your data. It's going to give you that ease in psychology, right? Don't just trade and forget the chart. Like, you have to journal it, and don't just journal it and write your little notes saying, yes, this was a good trade, I felt good, blah, blah, blah. Get the numbers out. You know, how often does it go there? What's the percentage? What's the risk reward that you normally see? You know, scaling out, you know, scaling in, is it worth scaling in? You know, just know your data, guys. It will help you a lot. That's what I'm saying. Data is king. Okay, last on the list, pound Aussie. Okay, so this is, let me see, there's a fresh one. Is it this one? This is again, pound yen. Don't really trade it as much. The setup does come, but it's just the way it moves. It's just very different. It's quite hard to predict. I'm not gonna lie. basically with pound yen, what I've realized, again, I know every single market at the back of my hand, right? I know that with pound yen, what it tends to do is that, which is just with every market's different. This has a few characteristics, right? Pound yen will not, like here, it will form a pattern and it'll just keep going down and it'll take me out. But then it'll form another pattern and it plays out. See, that for me is just a headache. Why am I going to be taking a trade when I know this happens a lot, right? And the other thing that happens is if, let's say, it doesn't have to form one pattern and a second pattern before it goes long, the first pattern, again, this happens sometimes, not all the time, the first pattern will trigger you in, but the boomerang will be too far out and then it goes long. So the characteristics of pound yen, I don't like it, so I don't trade it. When you look at Aussie or Euro, it's so consistent. Boom, 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 rally. Boom, 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 rally. It doesn't mess around. So Euro and Aussie is so simple to trade, right? Other pairs are just more volatile. Some are really rangy and just annoying, like Aussie. What's it called? Aussie New Zealand. That I don't trade it. You don't have to trade every market. You need to know your data behind every market, its personality, and trade what works for you in terms of what is easy to trade. Make your life easy. Forget the pips, forget the money, just forget all that. Just make it easy for yourself. And if that means trading just one pair, just trade one pair. I'm pretty sure you know how many successful traders there are trading just one pair. But anyway, pound yen is, it's a lot of momentum here. So what do I expect? It's quite hard to do my full analysis because it's not the whole checklist, but in terms of the next move, clearly there's going to be a stop on this area soon. So yeah, most likely I'll be expecting a rally. There's going to be some profit taking. That's it. Just focus on that. If you can find a long here after confirmation, even if it comes a little bit lower to maybe grab some imbalances here, just wait for the confirmation somewhere. It's not going to drop forever. I would just wait for a potential long. Obviously, when you have a pattern, it's going to kind of save your ass if there's a pattern. Already, this kind of changes everything. See why I like patterns? It gives you that structure. So now I know it's going to go a lot lower than where I essentially thought so. 1, 2, 3, 4, potentially 5 down here. Yeah, so this will probably go a lot lower now. And surprise, surprise, on the boomerang, this would be a good little magnet right here, just outside. That would be a good little target. So yeah, don't think it's going to reverse from here because of the pattern. You see what the patterns do? Helps you eliminate a lot of ICT levels. No offense, guys, but it really does. And then just wait for this, wait for a long. That would be my next trade, plan A. And then obviously there's going to be, when you investigate further, plan B, plan C somewhere. So this is what I'll be expecting on pound yen. Fred, I've been watching this one. 15-minute descending wedge. Yep, looks nice and clean. Nice little long coming up. Can you please look at Euro New Zealand? Okay, this is going to be the last one, guys, because I need to go. I think it's very interesting for long. Just wanted to confirm. All right, Euro New Zealand. Euro New Zealand. Boom. Got nothing here. I wonder why. Okay, so Euro New Zealand. I'll fix the trend line in a minute. Just trying to get an idea quick. Just made a new little high. It looks like it's coming to a point of interest where there's a cross section between this trend line, that trend line. I call it Rod or us. We used to call it the three aces. It's a nice point of interest. So you've got 1, 2, 3. All of this, and you've got 1, 2, 3. So yeah, Euro New Zealand, really good long. That's a three aces right there. That's a very good long. But if you're looking for a trade, since there's a three aces there, then a short will be ideal then, right? You can target that point of interest. And where are you going to set it? Well, you need obviously the analysis for that. Where is it now? Yeah, this is a great. Oh, this is beautiful. Beautiful. So who was this for, by the way? So Mo, Euro New Zealand is short-term bearish, but it looks like on the high time frame is going to be a big long. Really textbook sort of trade there. Beautiful. And then also sort of map out there's equal lows here as well, so it's going to reduce the win rate of that banker block. But either way, trying to pinpoint exactly where it's going to reverse from is too early. It's actually too early. But anywhere from around here, rest assured, I will literally make a bet with anyone here that there's going to be a long, a short-term long. Like, I'm very confident about that. If this completely melts, then I'll reevaluate. I'll see why. I don't think so, though. So yeah, short-term bearish on this one. And you can already see if you go on the lower time frame, if there's anything here. Yes, fine. You can find your little H1 flags and just implement the same thing. If you want to start doing, day trade 1, 2, 3, 4, 5, maybe take at that high, equal highs, and then look for shorts. Keep it conservative. Take some partials here, just to be safe. And if you're lucky, if it just melts and you don't have time to take partials, you can just ride it. But yeah. Fouled. Is this pre-recorded? It is. If you just go on the Trader Nut channel, this session and all the old sessions that I've done and all the other traders done, they are all recorded. Like the minute this will get uploaded automatically. That's the way it works. Also, Eid Mubarak to all my Muslim brothers. Hope you will have a great Ramadan. I mean, no, I mean, it is live or pre-recorded. What was live, because I'm talking to you live. I'm replying to you right now live, right? This is live, yes. This is the live market. Okay, great. Yeah, this is live, yeah. Okay, everyone, have a good day. And yeah, trade safe. I need to go. Yeah. Fair enough. Yeah, there was probably a little lag there. But all good. All right, have a good one, Fowler, and everyone else. Take care, Fred. Bye-bye, everyone. See you next week. Also, live webinar this Wednesday on CTI Discord. I'm going to be covering this strategy, but in more detail, more technicals, right? More, I wouldn't say advanced, but more an in-depth of how the strategy works. This is just patterns and Elliott waves. I'm going to be showing you how to catch the risk reward trades, how to use trade management, etc. So if anyone's interested, let me know and I could add you to the webinar for this Wednesday. I'm going to post a link on, where is it now? Invite people. I'm going to post a link, and yeah, just attend. Pretty sure you get some nuggets from it. It might help your trading a lot. Pretty sure it will. So just join the Discord community on City Traders Imperium, and you'll see the event posted. It's for 12 p.m. to 1 p.m. UK time this Wednesday. Just join the Discord, and you'll be able to see. Yeah, you'll be able to see the events, and I've got my little channel there for specifically for BLT and one-to-one traders, the advanced traders, etc. And it's obviously probably one of the best prop firms, to be fair. Now that all the prop firms are dropping like dominoes because they're not using their own technology and they're all registered in the wrong place and they're just blah blah blah. CTI, we've got our own technology. We take on US clients. You can scale up to 4 million. That's not a problem. But yeah, join the community, come say hi, and I'll see you next week or this Wednesday at 12 p.m. Have a good day, trade safe, and dollar weakness and then dollar strength is my bias on CPI. All right, take care, everyone. Bye-bye.